Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, August 30th, 2021. And our top story today, high satisfaction for TSP Investors. Joining me now to discuss this and a lot more, Kim Weaver is Director of External Communications for the Federal Retirement Thrift Investment Board. Kim, it's great to see you. Thanks so much for joining us on the program again this morning.
Great to see you, Jeffrey. Thanks for having me.
Yeah, it's great to always catch up with you and understand what's going on at the federal level in terms of the federal retirement plan. Just to kind of catch folks up, would you mind just giving us some basic information about the FRTIB and the TSP? I think that might be helpful just for context at how big and how big this plan is and who it serves.
Sure. The TSP serves federal employees and members of the uniformed services. We have 6.3 million accounts, and we have about 770 billion under assets under management.
Yeah, so that is not a small chunk of change. That is actually, by number, I think it's probably the largest defined contribution plan in the world. I could be wrong on that, but it's certainly the United States. And by comparison, the Boeing 401k, which is the largest corporate or private sector plan, is about $50 billion. So, 50 billion. So, I mean, we're talking considerably larger. So I would imagine there's a lot that goes into the decision making at the FRTIB, this board, and who makes up the board? I mean, don't tell me the exact names, but what are the type of individuals that oversee this along with the executive director?
So the statute that defines the board lays out their requirements for who should be appointed board members. And it's people, as you might expect, with financial backgrounds, with retirement planning backgrounds. And those are the people we have on the board. They either have, well, not either, they can be a combination of all depending on the board member, but they have retirement plan backgrounds, they have financial investing backgrounds. And they bring to bear, as any good board does, their outside experience to help us move forward and evolve.
And I should also highlight that you have a great staff of individuals that help the board. It's not just the board and the executive director. There are many, many people that support providing stats, information, trends, all that kind of good stuff. So it's a great group of people managing this very large plan. It's not just 5 or 6 or 7 or 8 people. Kim, let's talk about, I'm sorry, go ahead.
No, I was just going to say, no, it takes a little bit more than 5 or 6 people.
Yeah, just a little. Let's talk about the TSP getting some really great numbers, I think, from the investors in the program. And I just want to take a few moments to really drill down on this. And let's talk about some of the return numbers. They're really absolutely phenomenal. And just before we get to that, just remind the audience how many investment options are in the plan.
We have 5 core funds. We've got our G fund, which is Treasury securities. We have the F fund, which is a bond index. We have the C fund, which is the S&P 500. We've got the S fund, S as in Sam, which is the completion index. So between the C and the S, you own all U.S. equities. And then we have the I fund, the international fund, which tracks MSCI EFA.
Yeah, and I should also point out that it's probably the cheapest retirement plan by expense ratio in the world. I know it is among domestic U.S. plans. So let's talk about some of this performance, because I just reading some of these numbers, absolutely phenomenal performance. You went through the different investment options. How have I got to think investors in the 6.3 million participants, we call them participants in the retirement space, their employees, their workers, their retirees, but they have to be very pleased with these returns.
I would hope so. Yeah, we have. I mean, the TSP was set up to be, and we are passively managed, index funds. And so we follow the market. And as you know, the market, especially U.S. equities, has been doing quite well. And one of the things we do is we combine our 5 core funds into target date funds. We call them life cycle funds. And so we now offer 10 life cycle funds that go out to L 2065, because we have young uniformed service members who are 18, 19, 20 years old. And so it's appropriate for them to be invested very heavily in securities. So it's a 99% in equities, the L 2065 fund. And those funds have been doing, the underlying funds and the L funds have been doing quite well.
Yeah, absolutely. You look at these numbers, and again, we'll probably put them on the screen as we're talking, or as we're talking, they'll be displayed. But I have to think that in addition to the investors, the board has to be very happy with this. The staff, I mean, this is kind of, I guess, I don't know what the right word is, but supports the thesis of what they have been following in terms of investment policy and their fiduciary responsibility to manage this plan. I mean, it just supports everything that they've done to date.
I think so. And one of the things I would say is our L funds are designed, the federal employees and members of the uniformed services have a defined benefit plan. It's different for both populations, so it's not the same. And then also Social Security, of course. So our L funds are constructed to complement the fact that there are two other income streams for retirement. And that allows us for the near term to be slightly less aggressive than some of the private sector target date funds, which in downtimes, in 2008, 2009, for example, certainly the L funds lost money. I don't think there was, a fund in America that didn't lose money in those years, but they didn't lose as much money. And then they certainly have recovered very well if you stuck with it. And that's one of the messages we and many other long-term retirement savings plans preach, right? You have a plan and you stick with your plan and you try not to time the market because it's inevitable you won't.
Yeah, I mean, you just can't do that on a long-term basis. And I love the fact that it's indexed, because I'm a big believer, just personally, that if you contribute over a long period of time, you're going to ride out those ups and downs. And actually, by doing that dollar cost averaging, you actually smooth things out. Kim, last question for this segment. I would assume, but I don't want to make the assumption, that everybody who is a federal, you've got great tiers of this retirement system. You've got the pension that we talked about, there's Social Security, other things. I have to think that the great majority of federal employees use this plan. But am I wrong on that? Do you have 100% participation?
We have 94% of federal employees contribute to the TSP. The remaining 6% get an automatic 1% employer contribution, but they're not putting any of their own money in. And so they're missing out on the rest of the match. And the participation rate for the uniformed service members, the employer match portion for uniformed service members just started in 2018, but the power of auto enrollment that is rapidly growing. And I can't remember off the top of my head what their participation rate, but it is a steadily upward trend.
Yeah, and it's interesting, before we go to commercial break, how you can never really get, it's like you can't get to full employment. You can't get to, like, somehow within all these plans, not just the largest in the world, but even the second largest or the smallest, you just can't get 100% participation. And I think a lot of that has to do with the discretionary nature of the plan, and people want to choose how to allocate their monies. But the education continues. Kim, I want to take a very quick break. When we come back, we'll talk more about the TSP, get some updates, and who knows where we go with this. You're going to want to stay tuned right here on BRN AM.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Kim Weaver of the Federal Retirement Thrift Investment Board. Kim, thanks so much for staying with us this morning.
Absolutely, Jeffrey. Thank you.
Yeah, this is great, and I love highlighting the largest defined contribution plan in the world, and certainly here in the U.S. But investments are important, but so is administration. And I know you, the team at the Federal Thrift, the team that manages this plan on a day-to-day basis, handling the participant calls, the phone calls, the web services, all the services, they do an incredible job, and they're important as well because customer service is also king. So how are they doing, and what's going on the administrative side?
Well, they're doing very well. We recently did a participant satisfaction survey, and we found that our participants, 89% of our participants were satisfied or extremely satisfied with the TSP in general. So that was very gratifying. We used to do participant satisfaction surveys every 2 to 3 years. Yeah. We're now doing them annually, and that allows us to sort of fine tune and plan based on feedback we're getting directly from our participants. But as we talked about last time we chatted, we awarded a record-keeping contract in November of 2020, and we're currently in that transition period. We're aiming to go live in the summer of 2022, and that will provide some new services for our participants. One of the things our participants have asked for is a mobile app, for example, and that will be available. We anticipate that the new record keeper will help with just sort of ease of access, which is always, the less friction there is when you're trying to get to any service, the better service you're providing to your participants. But currently, even under the pandemic, we didn't miss a beat, and we continued with our call centers, answering phones, processing withdrawals and other transactions. And so while certainly I don't think anyone in any service industry has said that it's easy, we've been able to maintain the service we want to provide.
Yeah, and when you're serving 6.3 million people and you don't know when they're going to call, you don't know when they're going to send an email, the flexibility, the ability to be agile, really important. Kim, anything else? You mentioned the mobile app, and that seems to be the norm these days, right? That everyone wants a mobile app. They want to be able to go through the web. They want to be able to make a phone call. Let me ask you just anecdotally. I mean, any questions about maybe a self-directed brokerage being able to? And I don't know if it's in the plan today or not, but is that something that people who, if you're so dissatisfied with the funds and how they're doing, and they're doing quite well, but do you give participants the flexibility to say, okay, well, I'm going to buy an ETF, or I'm going to buy a stock that I want to buy through, or a mutual fund that I want to buy through a window?
Our statute allows for a mutual fund window, and that will be one of the services that we'll be providing when the new record keeper goes live next summer. And so the mutual fund window will have more than 5,000 mutual funds available on it. So to the extent that someone wants a gold fund or a REIT fund, or whatever their particular desire is, or they think that they need to supplement their other investments, they will be able to do that going through a mutual fund window.
Yeah, I got to think with the addition of that, I can't think of why someone would be dissatisfied or not give you the highest score, other than maybe they didn't get their call answered within like 10 seconds. Kim, let's talk about education. That's an important part of what you and the team at TSP do. We're doing education now. We're talking about this plan. Hopefully people are watching and taking something away from it. But your team, it's not just your team, but the team that you're part of, you spend a lot of time educating service members, federal government employees, retirees, pre-retirees around how to use this plan, including how to draw down money at retirement, which is a big topic. It's a topic du jour right now in the retirement industry.
It is, and yes, we do. So we have a team who is dedicated to making sure that our website provides the information in a way that's easy to access and is intuitive. One of the things that we have done, especially over the last 2 years or so, is we have a social scientist on staff who helps us develop campaigns based on behavioral finance. And that has really added to our ability to both target populations, but also target messaging. And we've done a lot of A/B testing to figure out what message is what messaging drives people to action. And so, to the extent we can get people, for example, to move to 5% of their contributions and get the full employer match, they are doing themselves a huge service in their long-term retirement planning. And so those are the kinds of things that we work on fairly regularly to make sure that participants can both access the information they want when they want it, and that we are pushing information to the right segments of our population.
And I have to think that, obviously the pandemic has caused a lot of stress and strain from a health perspective, a financial perspective, also a mental health perspective. I would imagine that people are craving this type of education. They want to go to a place that they feel is objective, independent, unbiased, to get the information they need to make the best decisions possible. Is that your sense from some of these satisfaction surveys that y'all are doing? You all are doing,
Yes.
Excuse me? My Baltimore accent.
What we have found is that our participants value the web. They value our call center, contact center, where they can call and get questions answered. And we have a secure email messaging so that, we obviously don't want people sending personalized information unsecured. So you can log in and send an email to us, and we can respond within a very short period of time with answers to your specific question. Something has popped into your head at 11 p.m. and our call center isn't open, you still have a way to get that off your mind and move forward.
Yeah, when I started in the record-keeping business, we had call centers that were open almost 24 hours a day and had late hours. That world has shifted, especially as we've gotten more digitally inclined. Kim, we're going to have to leave it there. It is always a pleasure to talk to you and the folks at the FRTIB. I want to wish you a great, wonderful day and have a great week. We'll talk to you again very soon.
Thanks, Jeffrey. Good to be here.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.